Greetings, students. Greetings to BALA'S accountancy special classes. Well, today I am taking up with you accounting equations. Okay. However, before switching over to my sharing section, it is better I explain the equations using the very whiteboard behind me. Well, this is the basic equation. A is equal to L plus C. In fact, in a limited company, the C will be replaced by E. A is equal to L plus E. Anyway, I'm not going to that extent. For your syllabus, it is A is equal to L plus C. In other words, assets is equal to liabilities plus capital. Okay. We can rearrange it easily. Liability is equal to assets minus capital. Again, it may be rearranged. Capital is equal to assets minus liabilities. Why this rearranging is done that? In solving the sums ahead, it will help you a lot. Similarly, the equation can be expanded. Assets is equal to capital introduced plus income minus expenses, or net of income minus expenses minus drawings plus liabilities. Please keep it in mind. These things, that means this capital introduced plus net of income minus expenses minus drawings is nothing but capital only, because net of income minus expenses is added to the capital. Similarly, drawings is deducted from the capital, so it is nothing but capital only. However, this expanded equation helps you a lot in solving the sums ahead. To put it simply, whenever any business transactions takes place, the accounting equation A is equal to L plus C is ensured. Assets are equivalent to liabilities plus capital. That equation is invariably ensured. Following are some business transactions. Started a business by introducing cash and or straight depositing the money into the bank. What I mean is that started a business by introducing cash or by depositing directly money into the bank or by a combination of both. Purchase machinery, purchase material, purchase furniture, sold goods at a profit or loss, on credit or cash, incurred various expenditures, amount collected from debtors, amount paid to creditors, bad debts written off, depreciation charge, etc. To mention a few. I'll analyze a few transactions and convince you that the equation invariably holds good. So let's just analyze some other variety of transactions, some very simple transactions. Later on, you may try the above mentioned 10 transactions yourself at home, which I have selected randomly. In case you are not convinced still, please feel free to be in touch with me using my contacts given in the description below. I will explain to your satisfaction. However, to conclude, the accounting equation represents the relationship between assets, liabilities, and capital of a business, and it is fundamental to the application of double entry bookkeeping, where every transaction has a dual effect on the financial statements. I want to elaborate this segment of the equation, this expanded equation. Drawings are amounts taken out of the business by the business owner. They will therefore result in a reduction in capital. Income and expenses relate to the entity's financial performance. Individual transactions which result in income and expenses being recorded will ultimately result in a profit or loss for the period. I want to reiterate this particular point. Individual transactions which result in income and expenses being recorded will ultimately result in a profit or loss for the period. The term capital includes the capital introduced by the owner plus or minus any profits or losses made by the business, which I already explained to you. Profits retained in the business, I repeat, profits retained in the business will increase capital and losses will decrease capital. Now, why the accounting equation will always balance? Because the dual aspect of accounting for income and expenses will result in equal increase or decrease to asset or liability. That is the fundamental principle. The accounting equation will always balance because the dual aspect of accounting for income and expenses will result in equal increase or decrease to assets or liabilities. Well, let us analyze a few transactions now. Well, students, let us take up effect of transaction on accounting equations. Okay, the effect of transaction on accounting equations. For example, let me assume that one Mr. Ram starts a new business and the following successive transactions takes place. Transaction number 1. Ram started business with rupees 3 lakhs as capital. You are an expert by this time. The journal entry is nothing but cash to capital, provided cash is brought. Anyway, let's assume cash is brought. So what happened? Cash as an asset for 3 lakhs has come. Correspondingly, capital also has come. So equation very much holds good. Liability is no, zero. There is no external liability at this moment. So cash 3 lakhs is equivalent to capital 3 lakhs. So total assets are equivalent to total capital. Now, next one. Well, transaction number 2. Ram purchased furniture for cash rupees 20,000. What exactly happened? Cash as an asset has come down to the extent of 20,000 and furniture to that extent is surfaced. That's all. That means total assets still 3 lakhs and liabilities plus capital is unaffected, same as 3 lakhs. So accounting equation very much holds good. An asset, that is cash here, partially utilized for purchasing another asset. Hence, no change in total assets or liabilities. That is the conclusion we have drawn here. Next one. Transaction number 3. Ram purchased goods for rupees 80,000. Here also, practically the same thing has happened. Only thing, yet another asset has surfaced. Cash from the previous 2,80,000, it has come down to 2 lakhs. Why? Because 80,000 was spent for purchasing goods. So cash 2 lakhs, furniture already existing 20,000, newly acquired asset goods 80,000. Overall assets is 3 lakhs and liability side is intact. So total assets equivalent to total liabilities. What's the conclusion here? An asset, say cash, partially utilized for purchasing another asset. Hence, no change in total assets or total liabilities. Transaction number 4. Ram purchased goods on credit for rupees 64,000. Here, on credit, that means cash is not utilized. Instead, what happened? We have committed a liability outside because sundry creditors have surfaced to the extent of 64,000. Goods have gone up to 1,44,000 from the previous 80,000 plus this purchase of 64,000. Total side of the assets is 3,64,000 and total side of the liabilities plus capital is also 3,64,000. The conclusion what we are drawing is asset purchase with the creation of external liability for the same amount, hence corresponding increase in either side. Next one, transaction number 5. Goods costing rupees 48,000 sold on credit for rupees 60,000. So it's a credit sale. Goods moved out. The cost of the goods that moved out only we should reduce from the previous total. Previously, we had 1,44,000 cost of the goods. Now, out of that, 48,000 moved out. So, remaining 96,000 goods are with us. However, another asset have surfaced for 60,000 debtors. Why debtors? A credit sale. And the amount of the sales, not the cost of the goods sold. Amount of the sales is what we expect from the debtors. That is 60,000. Okay. So the total of the asset side is all these four items together come 3,76,000. And liabilities plus capital is also 3,76,000. You may ask, from the previous 3 lakh, how I have got 3,12,000 as capital now? Well, there is a profit. 60,000 minus 48,000, 12,000. I already explained to you. Profit increase the capital. So 3 lakh plus 12,000, 3 lakh 12,000. So total of the assets are equivalent to total of the liabilities plus capital. That's what the equation is all about. So what's the conclusion we are drawn? Profit on sale of goods increases the capital. Cost, I repeat, cost of the goods sold only is reduced from the existing goods. Sale value of a credit sale will be shown against debtors. Okay. Now, next one. Transaction number 6. This is the last one. Okay. Paid rupees 4,000 for rent. I already explained to you that any revenue expenditure will reduce the capital. So the capital has come down from previous 3,12,000 to 3,08,000. Liabilities, external liabilities intact, 64,000 itself. So total liability side is 3,72,000. And our total asset side is also 3,72,000 only. Reason is simple like that. 2 lakhs cash got reduced to 1,96,000 on account of this expenditure of 4,000. All other things are intact. So from the previous 3,76,000 is equal to 3,76,000. It has come down to 3,72,000 is equivalent to 3,72,000. The conclusion is nothing but any revenue expenditure will reduce the capital. So these are the varieties of transactions and the effect of transactions on accounting equations. Now let us see how these final items have moved to the balance sheet. The same figures have been put in the liability sides as well as the asset side of the balance sheet respectively. And the balance sheet total is also 3,72,000 in the liability side and the asset side. That's why at any particular time, balance sheet will be tallied. And also, balance sheet will ensure the within accounting equation assets are equivalent to liabilities plus capital. Okay, we have seen at any point of time that equation was ensured. Well, now let us take up a full-fledged comprehensive sum from D.K. Goel's textbook. A practical sum I will work out for you. Okay, a comprehensive practical sum I will work out for you. Thank you. Well, students, let me take up this question number 27 of page 6.31 D.K. Goel. Well, it's as follows. Show the accounting equation on the basis of the following transactions. There are 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 items. And I had to arrive at this answer. They ensured that total assets are equivalent to total liabilities plus capital. The very accounting equation has been ensured. Okay. I'll work it out for you. Well, it's as follows. First one, commenced business with cash, goods, furniture. They are given the respective figures, this one 20,000, 50,000 and 30,000. You know that we don't have to necessarily start the business with cash only. We can introduce assets also. So all this they have introduced. Parallelly, capital will also come. What is the journal entry for it? Suppose you have been asked to generalize this one, means cash account debtor, goods account debtor, furniture account debtor to capital. Okay. So capital in the liability side it has come, and some of these assets are 1 lakh. So 1 lakh is equal to 1 lakh total assets. Well, the next one, purchase goods from Goel on credit. On credit means you know that an external liability is committed. So 40,000 in the liability side comes against creditors. And previous goods were 50,000. It has gone up to 90,000. The total of the assets 1,40,000 is nothing but the liabilities plus capital. Capital is intact, 1,40,000. Okay. Let us take the third one. Sold goods for cash rupees 40,000, costing rupees 30,000. Okay. So what is the cash inflow? 40,000. So previously it was 20,000. It has become now 60,000. The cost of the goods only reduced the existing goods in the stock. What was the cost of the goods? 30,000. It has become now, previously it was 90,000 minus 30,000. It has become 60,000. Furniture intact as it is. And the vital thing is that there is a profit 40,000 minus 30,000. I already explained to you. Profit increase the capital. So 10,000 capital got increased. Capital has become 1,10,000. Creditors already existing there 40,000. The total of the liabilities plus capital comes 1,50,000. That is just equivalent to the total of the assets here. Okay. Now let us take the fourth one. Sold goods to Ram on credit rupees 65,000, costing rupees 50,000. Anyway, goods costing 50,000, we are reduced from the goods. It has come down to 10,000 now because previously it was 60,000, costing 50,000 moved out. So 10,000. Cash is intact because it's a credit sale. Naturally, debtors will surface. How much? The value of the sales. Value of the sale is how much? 65,000. So 65,000 debtors are surfaced. And as just mentioned, the profit increased the capital. What has been the profit? 65,000 minus 50,000, 15,000. So previous capital was 1,10,000 plus this 15,000, it has become 1,25,000. The liabilities plus capital is 1,65,000. That is just equivalent to the total assets. Next one, fifth one. Withdrew for personal use goods costing rupees 5,000. Any removal from the organization, maybe asset, cash, goods, or even stationery, is nothing but, provided it is for personal use, means it is nothing but drawings only. So this is nothing but drawings, and drawings in 10 reduce their capital. So minus 5,000. Previously it was 1,25,000 minus 5,000. It has become 1,20,000. And of course, the goods value also has come down by 5,000. And the total of the assets is nothing but 1,60,000. That is liabilities plus capital. And the equation has been taken care of. Okay. And let us take up the sixth one. Purchase typewriter for personal use of the proprietor, rupees 20,000. Well, it need not be necessarily the existing one you have to remove. You have purchased this one for your personal use. Anything concerned with personal use is nothing but drawings. So typewriter purchase for personal use, not your office equipment. It is nothing but drawings. So drawings in 10 reduce the capital. So minus 20,000. Previously 1,20,000 minus 20,000. It has become 1 lakh. And of course you have to spend money. So cash has become 60,000 minus 20,000, 40,000. The total of assets is 1,40,000. That is equivalent to liabilities plus capital. So our equation, accounting equation is well taken care of. Seventh one, purchase chairs for office use. Well, this is for office use. Actually, furniture. What was the value of the chair? 10,000. Add to the furniture. Previously, furniture was how much? 30,000. Now it will become 40,000. And cash got reduced to that extent. It is practically nothing but one asset has been utilized for procuring another asset. So no change in the total asset value and nor any change in the liabilities plus capital. So the total assets are equivalent to liabilities plus capital 1,40,000. Previously also it was 1,40,000. Okay. And now let us take up the eighth one. Paid for printing rupees 500 and received commission rupees 1,200. An expenditure and an income. Well, expenditure has reduced your cash and income has increased your cash. So the previous 30,000 has become 30,700. Similarly, an expenditure will reduce your capital and income will increase your capital and capital has become 1,07,000. Okay. And the total of the assets is 1,40,700. That is just equivalent to liabilities plus capital. Okay. So our equation is well taken care of. Now let us take up the ninth one. Introduce fresh capital rupees 40,000. It's very simple. Cash has come to organization. Cash has 30,700 has become 70,700 and capital has gone up. Okay. Cash has gone up, capital also has gone up. And the sum of the total assets is 1,80,700. That is exactly equivalent to liabilities plus capital 40,000 plus 1,40,700. Our equation has been again taken care of. What is the basic accounting equation? Assets are equivalent to liabilities plus capital. Okay. And the last one, 10. Paid to Gopal rupees 30,000. Paid to Gopal. Gopal is a creditor. Creditor has come down by 30,000. The amount has become now 10,000. Paid means cash moved out. 30,000. 70,700 minus 30,000 is 40,700. So the total of the assets is 1,50,700. That is just equivalent to liabilities plus capital. That is 10,000 plus 1,40,700. And these figures are exactly what the author has said. You can cross-verify it. And I hope I explained to every entry. These are all the basic things, and this basic is what required, so that advanced things you can analyze and you'll be more comfortable. Okay? Well, students, I have explained to you sufficiently the full concepts of accounting equations. And also, almost a full-fledged sum has been worked out. Okay? And that's all for the time being today. Take care. See you soon.